Analytics. Good afternoon to you and welcome.
Thanks.
What do you make of the rand's performance against the dollar in recent days?
Well, unfortunately, the economic data we've seen released from the country over the last week has really highlighted the structural vulnerabilities that have been in place for quite some time now. Particularly the trade and the budget deficit data that came out highlights that both the private sector and the government sector is spending more than we're producing. In the government's case, they're spending more than they're bringing in. And that has to be funded through debt, and that's how South Africa, funds those deficits, is through debt. But when growth is weak and investors are concerned that the government and the private sector can't pay back that debt, they have to discipline the country somehow, and they either do that through a weaker currency or they do that through high interest rates. And that's what we're seeing at the moment with the budget data coming out, the trade data coming out, as well as the GDP over the last week. The rand's taking a bit of a hit, and unfortunately it's been in the post for a while now.
Well, we have seen production and manufacturing contracting, and so far all the recent data that has been released, for example, even in the car manufacturing industry, the sales have really gone down. Where is the economy heading, especially now that we know obviously that in the Platinum Belt there's been a strike, and of course doesn't look like things are looking good at the moment?
Sure. I think what's also important to highlight with the growth is that, once again, it's been in the post for a while. I mean, at ETM, we're calling the South African economy in a downturn back in June 2013. So it comes as no surprise to us that the economic growth is underperforming, unfortunately. And when the government made its growth projections for the year, at the time, we said that economic growth projections were unfortunately a little bit over-optimistic, and that's what we're seeing come to bear at the moment. And I think often the attention is placed on the strikes, and clearly they are having a strong impact on economic growth, but I think it's also unfair to place all of the attention purely on the strikes. If we were to take out, say, for instance, mining and manufacturing out of the GDP data, we would still be seeing quite weak growth in the order of 1.5%, which is clearly unacceptable and still quite shocking and not strong enough to produce the kind of employment that we need in the country at the moment.
So we hear that a strike is looming in the steel industry, and of course the Reserve Bank, when it meets in its next MPC meeting, will they be forced to actually keep interest rates as they are, or to be on a hike?
So, I mean, the SABC put themselves between a rock and a hard place, unfortunately. They've cut interest rates too much already in the past, when they should have been either hiking rates or keeping them on hold, in our opinion. And they've tried to create short-term economic growth with low interest rates and foster credit growth in the economy. But what we've seen is actually that policy hasn't resulted in much strong economic growth, and what it has resulted in is imbalances, as we said in the trade and the budget data, and that's had a strong impact on the rand and on inflation. So we've got high inflation, we've got a weak rand, and the SABC's got very little space to maneuver. In fact, chances are they'll be forced to hike sometime in the future, whether it's at the next meeting in the middle of July or the following meeting after that. The fact is that the market is disciplining the South African economy, and they're going to force them to hike rates going forward.
Mm-hmm. So looking at the way people are perceiving the South African currency, the argument has been now, why pit the rand against the dollar when you can look at other currencies which are very strong and performing well, like the euro, the pound, and the yen? And the argument about the yen has been that, look, China is the second biggest economy in the world, so why not move over to the second option?
Sure. I mean, the confidence surrounding the rand is unfortunately particularly weak, and a lot of that comes back down to policy from the government, and the policies, unfortunately, that we've seen implemented by the government over the last few years are not resulting in the right results. I mean, the data, as we've talked about over the last week, the vehicle sales was down about 10%, GDP growth down 0.6% quarter on quarter. The Kagiso PMI was also down to levels last seen in 2009. All these indices are actually down to levels last seen during the global financial crisis, which shows that economic growth has not improved since the global financial crisis, and that's clearly not acceptable, and it clearly highlights that there's something awry with the economic policies that we're running in the country at the moment.
Mm-hmm. Just on a parting note now, where do you see the economy going in as far as the repo rate is concerned, and high food inflation? As we see now recently, the petrol price will go down by 22 cents and all that. So this is just a mixture of things to come.
Sure. Unfortunately, the short-term outlook for the economy is not very good because there's limited space for the Reserve Bank to maneuver. There's limited space for the Treasury to maneuver, which then they're going to struggle really to support economic growth. And with credit growth quite weak, with economic growth globally quite weak, the outlook is not very good for the economy at the moment. Chances are, as I said, that the SARB actually gets forced into hiking interest rates, which might have a negative impact on economic growth in the short term, but I think it will actually be quite a positive for the economy going forward because it'll encourage real savings in the economy, which is actually a driver of long-term economic growth.
All right, Robert, thank you very much for your insightful perspective on the economy.
Pleasure.
Right. Robert Price is an analyst from ATM Analytics.